Welcome back to Making Money Matter, ladies and gentlemen. I've asked him back, Bernard Rowe, Managing Director and CEO of Ioneer. Why today? Well, it's quite extraordinary, Bernard. Look at him. He's got a smile on his face, ladies and gentlemen. If you don't know who they are, they've got the lithium and boron project in, it's called Rhyolite Ridge. It's in Nevada in the USA. The ASX code is INR. These guys did their first drill hole into this project back in December 2016 when Obama was president. I'm speaking to Bernard today when literally, as we're chatting, the new president is being inaugurated, literally as we're talking. But the final thing that the Biden administration did before they said their goodbyes was they confirmed this massive loan agreement. It's a 20-year loan agreement, $1 billion. Now it might be, up or down $1 million, but it's about $1 billion loan over 20 years at Treasury rate. So I thought it was really important to get you back onto Making Money Matter, Bernard, because surely I know a lot of people won't know this, but I know that there was a lot of work that went in behind the scenes. You can't talk about all this. You and I spoke in November last year. You intimated that you thought that this loan would be approved, but you couldn't confirm anything. But today we can say it's done. The deal is done. And is he smiling? Bernard, are you smiling? Are you happy?
Absolutely, Kerry. I'm very much smiling. I've had a big smile on my face for about the last 48 hours. So absolutely, yeah. Very, very exciting times for myself and the company. And as you say, on the closing of that loan, which we've been working on for a number of years.
Yeah, since they first put the drill bit in, they've had 4 presidents along the way. And here comes President Trump. I guess, and by the way, ladies and gentlemen, if you really want to understand the background to Ioneer, what makes it different, why this project is going ahead and why it's got so much backing from the US government, please go and listen to the conversation that I had with Bernard back in November, because we dove really deep into what makes this project different. I don't want to go into that today, Bernard. What I want to go into is, I guess why, first of all, I think it's important if we just mention this. The US is going to need, I think it's 1 million tons of lithium, and right now they're only producing about 5,000 tons. So there's a big, massive disconnect. And that your project is not just a mine, it's got a chemical plant. So you take the boron on the lithium from the mine, and there'll be a chemical plant situated right there. And so what I want to know is, and what our audience will want to know is, why do you need that much? $1 billion is a lot of money.
Yeah, Kerry, you're right. It is a lot of money, no question. But you're also correct in that it's a chemical processing plant. So all hard rock lithium mines around the world today, of which Australia has many of them, they do not have chemical processing plants associated or tied to the mine. They make a mineral concentrate and they send that off, ship it somewhere else, and in most cases, a third party then buys that material and processes it and refines it. In the case of lithium, most of that gets done in China. The importance of Rhyolite Ridge is that the chemical processing plant is actually intimately integrated into the mine. Same mine site, just a few kilometres apart, and that allows us to go from the rock, the mineral in the rock, all the way through to high purity lithium chemicals at the site. And there's big chemical processing plant, and that's what this money's for. It's for the chemical processing plant, not the mine. But that's the bulk of the capital that's required. Something like 90% of our capital requirements relate to the chemical processing plant.
When you put that first drill hole in back in 2016, was that the vision then to have this chemical processing plant, or did that happen along the way?
It was part of the vision back then, but you never really know. It's like with most mineral deposits, when you find them, and there had been people working here before us, acknowledging that, but we came with fresh eyes and we came looking through the filter of lithium plus boron, not just lithium and not just boron, but the two of them together. And of course, the first thing we had to establish was, well, how do you get the lithium and the boron out of the minerals that are in this rock? Now, sometimes you simply cannot do that out at a remote mine site in the desert, i.e. maybe it needs a lot of power and energy to release the elements from the minerals from the rock. But we were lucky here that this particular deposit, it's relatively easy to get the lithium and the boron out of the minerals that they're sitting in. And just like you would in a copper mine, really. And so that's what enabled us to be able to, I guess, dream initially and then demonstrate, of course, and spend a lot of money in doing so, that it actually could be feasibly done at the site. And that's exactly what we've shown.
I'd like to just look at it because, as I said before, you and I spoke in November. We did the deep dive into who is Ioneer and what makes it different, etc. Given the news out today, given the fact that you're going to get this money, how did you justify that amount that was required to the government? Because it was quite a long process to get there.
Yes, it was, and as you rightly mentioned, it's 8 years ago since we drilled the first drill hole. So at the beginning it was doing what all explorers and developers do, and that is defining an ore body and testing it and estimating tons and grades. Okay, but around about during 2018 through to 2020, we did a bankable feasibility study on this project. And that's a sort of a detailed estimate of your operating costs, your capital costs, and the project economics, what sort of returns would be generated by the project. So we finished that, 4 years ago. And what that showed at the time was that, there was this opportunity to integrate the chemical processing plant. It's really quite a fascinating process. It doesn't use any new technology. This is borrowing technology from other mining sectors that have been in use for a long period of time, particularly the copper industry for the leaching of the lithium and the boron. But anyway, in doing that feasibility study, we determined that the capital required at that time was around about $800 million. Now, since then, we've done a huge amount more engineering. We've made a few changes, nothing dramatic to the flow sheet, but by doing all that extra engineering, we've been able to get a far more accurate estimate. And of course, we've also had to take into account inflation and escalation costs over that period of time. And it's through that, it's a must to have completed a feasibility study. And in our case, because it's 4 years ago, it was also a must to update the economics and have a fresh look at that with today's prices, not just for the costings, but also for the revenues, the pricings for the underlying commodities. We have this, as you know, we have this major advantage because of lithium and the volatility of lithium and the pricing fluctuations. We're in a low pricing lithium environment right now. We think that will change, and most people agree. But we have this huge advantage that the boron sits beside the lithium and accounts for something like 30-odd% of our revenue. And there's not another lithium deposit like that in the world.
Isn't there one in Serbia or something? Isn't there one other? Or
sorry, yes, you correct me. What I should have said, there's not another lithium mine like that in the world. But yes, in Serbia, there is another project owned by Rio Tinto that also has lithium and boron. That's not yet in it's not yet in production. It's not yet in construction. But yeah, it's this closest type of deposit, most similar to Rhyolite Ridge.
I said right at the start, I'm talking to you literally as I should just say, drill baby drill comes into it. Does that change anything? The fact that we're going from the Biden administration to a Trump administration. Trump has made it very, very clear he's going to put tariffs on a lot of the imports into the US. Does that make your project even more important? And the fact that he said drill baby drill, will it make it easier for you to fast track your project?
I don't think probably fast tracking is probably not going to be something, just given that we're already permitted.
Yeah, you're fully permitted. Yeah.
Yeah, we're fully permitted, and we got that back in October. So, quite possibly, if you're at an earlier stage than us, it will have positive effects. But for us, that's behind us.
Okay.
And again, as you pointed out, rightly so, we've been through 4 presidential administrations, including a full term of the Trump administration, the prior Trump administration. And what I would say is that both sides of politics, there's been very strong bipartisan support for domestic supply chains, particularly as they relate to critical minerals, minerals that are needed for everyday life, for energy security, for national security. And, we've got 2 of them, and, there's always a lot of talk about lithium and where it comes from and the dominance of China. But let's not also forget that in our case, we're going to be a global 3rd largest producer of boron in the world. And the world is very much reliant on Turkey for boron. And, boron gets used in a huge number of applications, fiberglass insulation, micronutrients. It's used in glass. It's got military applications. So you're talking about 2 materials that are both really important for energy security, national security. And that's always been, both sides of politics have always been very supportive because of that.
Well, the market clearly liked the announcement, but I also wanted to just touch on the fact that Sibanye Stillwater, they are a partner in this. Just give us a quick update with Sibanye and where that sits at the moment.
Sure, happy to. So just to recap, we struck a deal with Sibanye back in 2021, and that was for Sibanye to come in at the project level, not into Ioneer, but at the project level, and acquire a 50% stake in the project for $500 million or $490 million US dollars.
Mm-hmm.
Now, that was a conditional commitment, and there are a number of commitments, but the big ones were, of course, having the project permitted, which we achieved back in October of 24, and the debt in place. So we've got both of those now. There are some other conditions as well, and so we've been working with Sibanye closely to finalise and meet those conditions. And Sibanye is completing their review and diligence on all of the information that we've provided to them. So, we're very close to the time when Sibanye must elect, are they going to continue working alongside Ioneer like they have been and move this project forward, or not, if that's the case.
Do you, given $1 billion loan from the US government, what's the funds from Sibanye going to be doing? I mean, and also 50% seems like quite a big chunk of the project. And I know it's at a project level, but it still seems quite a lot.
Yes. Good questions. And so firstly, what's that 490 going to be used for? It'll be added on to the debt. So the debt doesn't cover 100% of the cost of building this. So essentially we have 1.5 billion in the debt plus the Sibanye money. And that's the sort of amount of money that you need to build a project like this. That's the scale of it. So it will be used, it will be combined with the debt, actually what we call the equity component. The equity gets spent first and then the debt. But collectively, that's the sort of the quantum of funds that you need to build a project like this.
Okay.
I mean, it will produce, 20,000 tons of lithium and somewhere between 150 and 170,000 tons of boric acid, depending on which material we're mining, because some of it has higher boron and some of it has lower boron grades. But, and it can do that for many, many decades. So it's a very large mine, and it's a very large chemical processing plant to go with it. And it's been designed for a long time because it's going to be in use for a long time. So that's why the cost is what it is. But yes, it's a big capital project.
And the 50%?
So why 50%? Well, when we were negotiating with Sibanye, we were looking for a minority partner in the project, but we wanted a partner of strength to come in with Ioneer and help and work with us, who also not just brought financial strength, but also mining and construction and processing strengths as well, given that Ioneer is a small and emerging company. And so hence that's why we selected Sibanye, and Sibanye were quite keen on the idea that it'd be a 50-50 joint venture, and so we agreed to that. But in return, I think the number was an additional $100 million of consideration. So, but basically at that time, that deal was valued at $100 million US for every 10% of the project, i.e. $1 billion US for 100% was the valuation. And that was based on that feasibility study that was completed back at the time.
And in today's market, your market cap is just sub 500 mil, I think. So you're saying that back then the value of the project before it even got started was $1 billion, and that this is a multi-decade large mine. Do you think that potentially one of the larger, and there's only one or two of them out there, might come in and say, all right, this is reality now? Do you think having Sibanye in there as your partner will stop anyone coming over to try and take over the project after all this work you've done, Bernard?
Oh, look, takeovers are always, there's always the risk when you've got a really great long life project like this, but we don't sort of make our plans around that. We're prepared if that happens, and obviously have advisors appointed, etc. But if it does happen, but that's not something that we're sort of building into our plans. We're definitely focused on closing the deal with Sibanye and commencing construction on the project. It's literally ready to build right now. The engineering is completed well beyond what's needed to be start construction. Our permitting would allow us to go out and start immediately with the federal permits. And obviously the debt is now in place. And so really the next and last step is that final equity part of it with Sibanye, so that we can then move into construction.
Now, my audience will be all sitting there thinking, all right, shares right now, 17 cents last Friday, which I think was the 18th. We've come out with this announcement. The market likes it. Shares are now 20 cents. Market cap, as I said before, just sub 500 mil. Why do you, and I don't want to put words in your mouth, but back in 22, you were about $1 billion market cap. I think the share price was about 80 cents. So it's come off quite some way. And I suspect part of that is to do with the lithium market dropping. Where do you see value as we go into 2025 for Ioneer and for my audience that are listening out there?
Yes. Again, good questions. And yes, definitely, we, like all lithium companies, much lower valuations today than we were a few years ago. And I think you're right. Largely, that's a reflection of what the lithium sector has done. The price of the underlying commodity has fallen from $80,000, which was unsustainable. But it's, back down now to around $10,000 a ton.
Wow.
And actually, just going back to that first drill hole when Obama was president, the price of lithium back then was around about 6,000. So we've seen it go from 6 up to 18 and back down to about 8, and then up to 80, and now back down to 10. So it's very volatile. And the reason for that volatility, in simple terms, is that it's a pretty small market still. It's very much growing, but it's still commodity-wise, it's a fairly small market. So it doesn't take much to get a mismatch between supply and demand. Okay. And when there's surplus material, prices fall, and when there's a scarcity of materials, prices rise quickly. So that's had a lot to do with the valuation of all lithium companies, and unfortunately, we've been not spared in that regard. However, I would definitely point out that the things that differentiate us are significant, and that is the fact that we have a fully permitted project. It's in America. It's 2 materials, not 1. Both of them are very, very critical for the US supply chain, and rebalancing the the current situation with, Turkey for boron and China for lithium. And we've got that funding in place, the debt and the equity to come. So they're the things that
sorry
really...
to interrupt you, but the equity to come, when are we looking at that being finalised?
So Sibanye, that's obviously very much in the hands of Sibanye. We've delivered all of the information to Sibanye, and they've been reviewing that over the last couple of months. And so in the coming weeks, we would be expecting to have some indications from Sibanye. So that sort of time frame, over the next few weeks to a month, that sort of time frame.
Do you think that they were waiting to see about this loan agreement having the final tick before they decided to jump and finalise?
No, they weren't. No, it was more about, but it wasn't coincidental either. The work streams were going in parallel, basically. And actually a lot of the work that Ioneer had to complete, updated cost estimates, updated resource, updated reserves, the permits, they were required for both Sibanye and the DOE. So of course, when we finished the work for one, we finished it for the other, and we shared it. So, and we said that at the time when we got permitting our permits, which was also the same time as we held our AGM around the same time. And we said, look, the bulk of the work we've finished, and we're just finalising a few things. It's going to take a few more months to finalise and share and have the diligence completed by both the Department of Energy and by Sibanye. And so that's what's been happening. Obviously, the Department of Energy's finished theirs, and I'm expecting Sibanye will, in very short course, finish theirs. So they're very much tied together. It's not coincidental that they're happening at the same time, and they draw on exactly the same information.
Right. There's so much more I could talk about as well. So we'll get you back on again soon. But why do you think right now? Obviously, we've talked about the loan tick, Sibanye next few weeks tick. This is a big project, lithium and boron. So it's good to have those two commodities. It's not just a mine; it's a mine and a chemical plant. It's within the USA. Give me two answers to that. I've got two questions, two answers. Biggest challenge, biggest opportunity.
Our biggest challenge is now for us execution. So it's building a project. We've said how big this processing plant is and the complexity. It'll take 2.5 years just to build it. So it's that execution risk. Okay. But rest assured that we've, just like all the other risks that we've dealt with along the way and continue to deal with, we've put a lot of time and effort into sort of thinking and planning about how that, and strategizing on how we address that risk. But it's execution risk. Biggest opportunity, I think, we're in this very low pricing environment, the bottom of the cycle for lithium. And that will change, okay, because of this supply-demand imbalance that I talked about. And when it changes, it often changes quickly because of the small volumes that you're talking about. And I think we're incredibly well placed to have a project that's fully permitted, debt funded in America, clearly with the backing of the US government. And, this project is incredibly important to America. Just another little side thing that I'd point out is that it's the only lithium project permitted during this previous administration. So in the last 4 years, this is the only project that's been permitted in the United States for lithium. And it's also one of only two that's had a loan closed during that same administration. 2 lithium projects, 1 permitted. So it's very, very important, and it's the only other source really for boron into the future beyond the existing production, which will at some point run out. So the opportunity here is that we're in this very low pricing environment, but we're very well positioned to actually get going on this project, start construction, and then be producing later this decade when we think prices will be higher. And I would also say that the valuations that we've done on this project have always been very conservative. When we did the feasibility study, I think the NPV, net present value, was about $1.2 billion US, using a lithium price of around about 13,000 and a boron price of $700 a tonne. Okay, we've got a far superior project today because of the things I've just mentioned, permitting, debt, etc. But we've also got a much bigger project. We've done a lot more drilling. We've got much larger resource. We're just about to put out in the next 2 weeks the updated reserves, much larger. So we are expecting to see a significant increase on that NPV of 1.2 billion US that we had back in 2020. And here we are, as you point out, sitting here today with a market cap of around about 500 million Australian dollars. So we think there's tremendous upside in Ioneer. It's a very rare deposit, it's a rare asset, and it just happens to be sitting in America, and America desperately needs it.
Drill, baby, drill.
Drill,
Bernard Rowe,
baby, drill.
Drill, baby, drill. Really great to have a chat with you today. Congratulations on ticking off that loan approval. I think that's massive. We look forward to getting you back on again, maybe when you've got that updated reserve. But ladies and gentlemen, Ioneer, little Aussie company, creating a massive mine and opportunity and chemical plant over there in Nevada in the US of A. Bernard, thanks so much for joining me on Making Money Matter.
Thank you very much, Kerry. Pleasure.